Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne Man with David Ingles.
Our top stories today: global markets jolted after President Trump calls for the evacuation of Tehran and cut short his G7 visits. Also, reports from Ukraine noting that Kyiv is under massive missile and drone attacks.
Israel is vowing to continue its strikes against Tehran's missile and nuclear program, regardless of any negotiations involving the U.S.
And the BOJ is expected to stand pat today, but the focus will be on the review of its bond purchase reduction plan.
We start the show with some breaking news this hour, and we're moving away from the Iran-Israel sort of headlines here. We're focusing now on what's happening in Ukraine. As David mentioned there, so according to Ukrainian officials, a combined Russian and missile attack in Kyiv overnight has left at least 20 people wounded, 12 civilians injured, according to some officials here, and the capital, Kyiv, is under that massive missile drone attack. So this on the back of what we were seeing in the G7 with President Trump leaving early to deal with those tensions in the Middle East. But yes, markets are just kind of focused right now on every sort of headline. You see how oil markets are going, and really they're clinging on to whatever news we get this hour.
Yeah, the headline risk again back in focus,
yes.
Right? To the point Yvonne was making, right? So oil actually going into the morning today was on the back foot. We are now slightly higher in Brent crude, 0.5% to the upside. So really the relative calm in markets that we experienced for a brief fleeting session or so on Monday has quickly, I guess in many ways, gone away. Although, as you can see, equity markets in the Asia-Pacific are still clinging on to some gains. We'll see how long this lasts. 0.3%, though, to the downside on S&P futures. We talked about Brent and gold. Flat, while flat, of course, is retracing some of its weakness back to about the current levels of 34.15, 34.20. The look across FX markets is perhaps more indicative of the risk appetite out there, where you have, of course, the euro on the back foot. Dollar yen, it's the BOJ. We'll talk more about this in a moment. Of course, some weakness, again, is coming through on the Taiwan dollar after it breached the 29.50 level on the stronger side of that level around this time yesterday. And of course, we've been tracking the weakness coming through here in the Hong Kong dollar. But again, yes, broadly, dollar strength is coming through. Very quickly, the move overnight in China, 2% to the upside. So we're looking at all things casinos, pharma, and everything in between. We'll talk about that last stock you see on your screens a bit later on. That's an herbal company that's really gone, herbal medicine company to be more specific, and for the lack of reasons indicating why we are up substantially. We have a big story on this later on. You can read about it now if you can't wait on the Bloomberg terminal for you. Very quickly, the approach to the open now is we're flat, 10-year yield on deck, and of course we're looking at dollar strength coming through here at 7.1848 there against the U.S. dollar. Right, so the headlines coming through today. So President Trump, number one, calling for the evacuation of Tehran. Number two, we do also understand that he is cutting short his G7 trip hours after he then took, as we've been pointing out to social media, to call for that evacuation of the capital of Tehran.
President, any statement on why you're leaving the G7 early for Washington?
Well, I have to be back. Very important.
David Gura joins us now from Banff in Alberta. David, thanks for sticking around. There's been a lot of breaking news. Walk us through what's happening now. And we understand, of course, the U.S. president will be cutting his trip short.
Yeah, so let me start there, and then I'll get to what's happening in Ukraine in just a minute here. But I'd say this was an unprecedented circumstance, but of course we've been here before. President Trump has left another G7 early. That was back in 2018. But he did that kind of in a fit of pique. He was upset with how everything unfolded. And over the course of today, the first day of this summit, there was really no indication, David, that he was upset with how things were going. We saw him trumpet a deal that he inked with the Prime Minister of the United Kingdom, Keir Starmer, a trade deal that was announced a couple of weeks ago back in the Oval Office. There was a lot of talk over the course of the day about the situation in the Middle East, and the U.S. indeed did not decide to sign a kind of joint statement among the members of the G7. But then there was that post on Truth Social urging residents of Tehran to evacuate, and it seemed like the situation was really escalating. And then there was this announcement from the president's press secretary, Caroline Leavitt, that the president intends to leave this event early, intends to leave after the dinner tonight. So you saw that footage just a moment ago of the president and other world leaders in the G7 posing for that family photograph, which is kind of stock in trade of gatherings like this one. What's unusual is He stopped to field questions and commented on his departure, and he says he has to get back. Caroline Leavitt cited the Middle East as the motivating factor, the reason why he's going back to Washington, D.C. And he was gracious in telling Mark Carney why he had to go. Mark Carney, the Prime Minister of Canada, seemingly understanding of why the president has to leave. But here we are at a moment when other world leaders who aren't in the G7 are making their way to this remote corner of Canada. We have Narendra Modi just landing here in the province a few moments ago. Vladimir Zelensky was supposed to meet with these leaders tomorrow, so he will be missing a full day of meetings, and we were preparing for a press conference at the end of the proceedings tomorrow as well from President Trump. Now, you mentioned those strikes in Kyiv at the top of the show. Obviously, this is another worrisome sign. It does feel like there are so many confluent global issues taking place at this time, maybe adding urgency to the president's desire to get back to Washington, D.C. But of course, it reminds folks of what President Trump said earlier today when he was standing next to Prime Minister Mark Carney, expressing some regret that Russia was expelled from the G8 back in 2014 and suggesting with a counterfactual that had that not happened, maybe this conflict in Ukraine wouldn't have happened either. That's something that we've heard the president say over and over again. But just to recap everything, a lot has happened here in these last few hours. We understand the President of the United States is going to be on the ground here, is going to have that dinner with the other world leaders, head back to Washington, and he'll get back there very early in the morning, Washington time.
And what we were focused on just maybe a few hours ago that maybe was a bit of relief for markets was what the Journal had reported, that Tehran was maybe open to continuing on these nuclear talks with the U.S. as long as D.C. doesn't join in on the Israeli attacks here. What more do we know at that point, on this point, David?
So this has been what the president has been saying over the course of the day, indeed in the weekend leading up to this summit, is that he really thinks diplomacy is the path forward here. He was asked about the path forward at several bilateral meetings today, and he said there really has to be a diplomatic solution. Iran is effectively at the table. They have to make a deal here. That's still fundamentally what he believes, but we're in this kind of crucible of crisis at this moment. The conflict continues, and the open question is, how does that happen? Another big question is, what is the U.S.'s involvement going to be? Is President Trump going to return to Washington and decide that the U.S. gets more involved in this conflict? I should say there's a more optimistic read on the situation, and that's one that's been advanced by the French President Emmanuel Macron at that family photo just a few moments ago. He said, if there's a way in which President Trump can go back to Washington and convince both of these sides, the Israeli side and the Iranian side, to reach some sort of ceasefire, that well be worth him leaving this event early. So what we're trying to figure out here, what we will be trying to figure out over these next few hours, again, are the motivating factors for his departure and indeed what the White House has planned in terms of its continued engagement with that crisis in the Middle East.
David Gura, fantastic. Thank you so much for joining us there in Banff with all the headlines that have been crossing here in the last few hours. And of course, let's bring in our next guest. He says that this week specifically is a make or break one when it comes to risk assets. Chris Weston of Pepperstone Group thinks market conditions are morphing and it may be premature to buy the dip now. He joins us right now. Maybe to flesh out that view for us, Chris, and how the trading environment has really changed for everyone.
Well, I think you'd seen such a low volatility environment. Ranges were so suppressed and everything was very much in a holding pattern. Income strategies were the way forward. People were looking at carry and FX in select currencies, certainly in LATAM. And that was because we saw this sort of positive grinding, very low range kind of situation. You wanted to be paid to be in the position. Now, I'm not necessarily giving up on buy the dip completely. I mean, I think there's clearly a bid coming back into the market. We saw that yesterday, obviously, on the back of the Wall Street Journal article. On Friday, when oil prices spiked up, we did see the buying coming back in, did tail off at the end. But there's certainly still a bid in the market. So I don't think we can necessarily give up on buy the dip yet. I mean, it's been a very successful strategy. And I think the situation in the Middle East is obviously something we're watching very, very closely over the next 12 to 24 hours to see how this develops. And we're obviously looking at the tail risks around that situation and looking at the probabilities and the distribution. But, I think the way that I want to play this right now is more on let the market come to you, use the market feeling a little bit more compelled about what they're seeing and buy strength rather than actually buy a pullback and buy the dip. So I think 60.50 is the level on the S&P futures. There's been a ceiling above that. I think we want to wait for a close above that level. And then, that will be, for me, the market saying that they're feeling comfortable about where we are at the moment. Obviously, that would probably coincide with a pullback in crude volatility, which is still pretty elevated. And, I think then the market can move on to other factors, thinking that the supply issues in the Middle East are well contained. But it's, obviously still a very fluid situation over the next 12 to 24 hours.
Chris, you mentioned, David here, by the way, you mentioned buy into strength, and somewhat that an asset that's somewhat caught somewhat of a bid recently, given I guess what's going on in the Middle East is the U.S. dollar, which, as we all know, has been on the back foot going into, let's call it the last few days or so. What do you think is behind that sort of bid underneath the U.S. dollar? Is that positioning, or is the market rethinking now the role of the dollar as a haven?
Well, we're seeing a little bit of buying in the dollar today. Certainly against the yen, it's coming nicely above where it's really been a ceiling, about 145.05 really since throughout most of May into June, and it looks like it's sort of poking its head above the precipice there, and that may continue to get a bit of a run on into the Bank of Japan. Obviously, got the Fed meeting, and then we've got the Ministry of Finance call on the duration side of things on Friday, which will be quite interesting. Probably the bigger event for the yen in some capacities. But yeah, I think that positioning is absolutely at the heart of that. If you look at the flow data from the flow desks, we know that the real money accounts are really very, very short of US dollars at the moment, and they are the big drivers of the move. The hedge funds love to get set in positions and start at early doors, and I think they did in January. And obviously, we've seen a 8% move down in the real effective exchange rate in the US dollar. But it's the real money accounts, your pension funds, your insurance companies, that when they get going, they can cause a really, really strong move. Now, positioning in real money is very short. Positioning in the hedge fund community, in the leveraged account side, has cut back quite substantially. And I feel like that's probably the short-term trade for me, is given that the real money are still very short. Retail have been buying US dollars, is that there's probably got a little bit of upside in the US dollar going through this week. I think we'd probably trade up to, I would probably be looked to flip the position and initiate shorts probably into sort of 99.50, maybe 100 in the dollar index. And that would just give us a little bit of a positioning flush out to get set for another leg lower. So there is a very strong consensus trade that the US dollar is going lower over time. But I think short term, there's probably some upside risk from that positioning. But I don't think people are giving up on the US dollar. I don't think people are giving up on US assets. That's not the case. I mean, it's more about that massive investment pool that is being somewhat neutralized in some capacities. And that's got more to go. But yeah, obviously the US dollar is still the reserve play. And that's, in my mind, not going to change for a long, long time.
You mentioned about it might be too early to buy the dip, but maybe it's time to hedge in some ways. And you're saying there is more of increased demand to pay up for protection in some ways. What is the best hedge right now, Chris?
It's difficult to say. I mean, I'd say the volatility channels are cheaper. Gold's been the best hedge, obviously, and you can choose it. You can cherry pick why it's been a hedge after the fact, of course, but that's near all-time highs. So it's very, very difficult to chase the gold price here. I like buying strength as well. If it starts moving up, it doesn't really matter what I think. It's the market is telling you that they still like the story, and that's good enough for me. So there are still some attractions, but again, for me as a short-term trader, I want to see the market, find a collective view that it's still very nice to own at these levels and add to that position. But from a volatility perspective, I mean, the VIX sub 20%. It's been a bit of a reduction in tail risk hedging. You've seen that in S&P 1 month 5 delta puts relative to 1 month at the money volatility. That's sort of those 5 delta puts have blown out to about 15 volatility difference, which is not dramatic. It's not extreme by any means. But I think if you thought that there's something was going to happen in the Middle East that affected the Straits of Hormuz, which is not going to happen, but if you thought that there was going to be some big downside, then obviously that's not expensive at those levels at the moment as well.
Chris, so I guess back to your earlier point that you want to lean into what seems to be a stronger trend. So if people are trying to figure out, okay, if it's equities that I buy this week, where across the equity complex do you think there is momentum? And I guess along the same lines, you think that Europe is the weak link in the equity complex. Tell us why as well.
Well, I think Europe led us higher. That was the outperformer on the through April and May, and we saw the DAX making continuous all-time highs. That was the first market to hit an all-time high, and we saw a bit of a rally overnight, but it was down 5 consecutive days in a row. And I think maybe that is the canary in the coal mine that other equity markets are going to look at and say, well, we've had a good run. Maybe it's time to increase hedging a little bit. It's cheap to do so. I know hedges obviously subtract from alpha and the performance of the fund, but obviously, it's not overly expensive to do so. But the DAX has underperformed in the last couple of weeks, and maybe that's something that people can look at from a long-short strategy. But yeah, I think you've seen a situation where you asked me where the momentum is at the moment. Well, it's in semis. Semis are up 50% since the recent lows. They're not cheap anymore. Not that you buy semis because of valuations, but I think you take a stock like Meta, for example. I had a nice move last night on the back of that they're bringing out ads on WhatsApp, which is bringing them a potentially new revenue source. But I think that looks quite nice, and I think everyone owns Meta at the moment. But I think that pushes higher. I think the story in Nvidia is still very, very strong as we go into margin expansion in the coming quarters. So I feel like that if market is going to chase that stock, if it kicks, I'll be looking to buy that stock as a momentum trade. So for me, a body in motion stays in motion. I like to do that. I like to wait for the collective views and beliefs in the market to be all shared, and that's kind of what I'll jump on. I think if it's going to come, it's probably going to come from those consumer discretionary plays and also the high beta tech and AI names at the moment. I think that's where the trade is going to be.
Chris, fantastic. Chill and let it come to you. Chris Weston, thank you so much. Great context, sir.
Absolutely.
Thank you. As always, head of research at Pepperstone Group over in Melbourne for us. Right, coming up here in shows, T. Rowe Price joins us as well to talk about risk and opportunities. Well, what don't we talk about when it comes to risk and opportunities there? Anyway, Thomas Poullaouec joins us at those times on the screens for how they're looking at markets specifically and how they're weighing really weightings across these different asset classes.
And we're counting on the open of trade in Shanghai, Shenzhen, and Hong Kong. This is the China Show.
Right, welcome back. Well, the story across markets is with headline risk, and the calm from Monday has somewhat gone away. Now, but to say as well the other extreme, where it's a day for a pure haven play is also a disservice. But you're looking at gold, for example, catching a bid, but the yen, Swiss franc, as you can see, slightly on weaker footing as the dollar. I guess repositioning is towards a stronger dollar today. 10-year yield is down 2.5 basis points as we speak.
Yep, we're looking ahead to the BOJ decision later on today, with the central bank largely expected to stand pat when it comes to rates. But the focus is really going to be how they're going to reduce their whole bond purchase program here. For a preview, let's bring in Taro Kimura from Bloomberg Economics. He joins us live from Tokyo. So, Taro, tell us a little bit more about the implications of the BOJ's new JGB purchase plan, and what does it mean when it comes to trimming that balance sheet?
Right. So the market focus is really upon the new BOJ's purchase plan. It's going to lay out it's going to extend 1 year, and most expected, it's going to reduce the tapering plan, slow the tapering plan from latest 4,000 billion to have it to 2,000 billion. It matters. The math matters for the JGB traders, bond market participants, but for economists, in a broader picture, there's no significant change that in that the Bank of Japan's balance sheet is going to shrink, because there's also a existing big holdings of Japanese government bond in its balance sheet, and many of it is coming to mature for redemption. So because of the redemption, the runoff will continue, even though the BOJ might slow down its new purchases. So therefore, the big picture won't change regarding how the JGB, the Bank of Japan's JGB is going to taper the long-term yields.
Right. And I mean, you mentioned big picture, and the question when it comes to the Bank of Japan is, when is the next hike? And I can't help but think, and I know you've written research about this, what does this spike in oil prices mean for inflation signaling in Japan, what they might say about inflation today in their statement or at the press briefing, and what that could mean for the timing of the next BOJ rate hike?
Right. So the market shouldn't forget that it's a human tragedy, but also the tension in Middle East is closely tied to Japan's economy via oil prices and inflation. So the picture shown is my estimate on how the latest shock reflecting the Israel-Iran conflict will impact Japan's core CPI year-on-year gauge. And orange and yellow line is the shock already happening yesterday, the $73.5 per barrel. It's already a 0.7 percentage point shoot at most to Japan's core CPI inflation. And the Bloomberg economics have a worst case scenario, which I really hope that won't happen, $130 per barrel. If that happens, it's going to game changer for the BOJ. BOJ won't be able to say anymore that we should be very cautious. Rather, the BOJ has to shift to a inflation fighting mode if that happens. So in a nutshell, the huge dependency on the Middle East oil for Japan's energy is linchpin for Japan's economy. And I think the BOJ, look, the BOJ in the previous price outlook, they were expecting the oil prices will decline and kept in check because of the increased supply for the OPEC plus. It was May 1st, by the way. But right. I think the latest oil price hike hit the Bank of Japan off the guard, and I am closely watching how the weather will react to this move.
Taro Kimura, thank you so much, out of Bloomberg Economics in Tokyo for us, giving us a preview of the BOJ. Coming up into the open today, under 7 minutes away, Hang Seng Index, dollar China on your screen. It's a preview of the day ahead coming through. This is the China Show.
Futures a little bit on the back foot here this morning. Take a look at when it comes to some of the oil plays, and we're seeing some downside for PetroChina and really that catch down story in Shanghai crude here right now. But then again, it's really been headline driven what the oil price is doing, given what we're seeing in Iran and Israel there. Trump cutting his trip short and telling people in Tehran to evacuate as well. We're watching Chow Tai-fook here today this morning.
Convertible bond there, due 2030, $8.8 billion. That's a convertible. We'll talk more about this. Stocks are down, of course, 2.4% today. Casinos, too. Yeah,
casinos, a big one here. So the U.S. listed operators traded higher here on the prospect of June gross gaming revenue was trending higher than expected. Also, there's the Macau allowing visa-free access to citizens from the Middle East. So you are seeing the casinos up this morning. Welcome back. You're watching the China Show. No shortage of headlines here this morning. Everything from what we're seeing with the gyrations in oil, with President Trump with that Tehran warning, and then cutting his G7 trip short here to deal with the situation in the Middle East as well. You add that to another sort of missile attack in Ukraine. That certainly is adding to the volatility here this morning. You are seeing futures pretty much flat here. Hang Seng is just slightly to the upside. We're watching very closely what happens with dollar China. It was actually a pretty strong fix from the PBOC here today, the lowest that we've seen in 3 months. So we are actually seeing a little bit of a strength coming through in the currency. But yes, a lot going on still.
Yeah, the added complication potentially from central banks, what the BOJ might do and say. There's also the Taiwan dollar story, which is now we're back below the 29.50 handle as far as that's concerned. So again, the sort of broader FX overlay. And I'll just add to that, too, we're, again, very, very close. We're still watching it, though. We're very close to the week end of the trading band here in Hong Kong.
Yeah, dollar is catching a bid, right? You asked whether it is regaining that haven status there. That certainly is one thing we're dealing with in this market. The onshore markets are doing this right now. It's a pretty mixed picture, but slightly higher in the CSI 300 by just 0.1%. We're watching very closely what happens with crude, right? So there you go. It's a catch down story for crude here. We're down now some 2%. So coming back from some of the highs that we saw yesterday, but certainly it's certainly a very volatile space here right now, just given what we've been hearing in Calgary, what's going on in Israel, as well as in Iran. So you take a look at what's going on in Hang Seng. It is looking slightly better when it comes to the tech space here today. We're flat when it comes to 8 shares. The property sector also in focus. Goldman had a pretty interesting line coming through when it comes to China properties, saying housing demand is going to stay at 75% below the peak, which is basically back in 2017 sort of levels here. So one thing to watch is the property space. Tech seems to be doing slightly okay. We talk about the Hong Kong dollar is edging towards that weaker part of that band here as well. And we're watching, of course, casinos. So there's been a lot of talk about what's been going on. The U.S.-listed Macau casinos, or the operators, were trading higher on the back of what we heard was from gross gaming revenue in June looked pretty good. Also, Macau will allow visa-free access to citizens from the Middle East as well. You add the retail sales beat yesterday from the activity data, that certainly is helping the consumer space. Macau casinos seem to be benefiting from that as well. Sands China up some 2.5%. And pharma stocks as well. If you want another reason to buy, we certainly got it, right? China planned to shorten the innovative drug clinical trial approvals there. So might possibly light another fire on this rally, Dave.
From 60 days to 30 working days in an attempt there to support the new drug R&D. So, yeah, lots to watch today. So among the many, many things, of course, we also have some job numbers coming through out of Hong Kong. I believe right now that John Lee is, in fact, just beginning his briefing as well. So keep an eye on that. We talked about crude. President Xi Jinping is in Kazakhstan, and we talked about dollar weakness and, of course, casinos. In fact, let's get on that note, on the casino stocks and that big rally that we had overnight, 6 to 8% in some of the U.S. listings there. Min Lo, our China correspondent, is here to talk us through what the casino story is today. What's driving this higher revenue story?
Yeah, we actually haven't gotten the official revenue yet, but this is driven by forecasts from analysts who are saying and citing industry sources that the revenue trend is higher than expected and also higher than Macau's government's average monthly target. And there are a few different things that could be at play here. One is Macau allowing visa-free access to countries in Saudi Arabia, including countries in the Middle East, including Saudi Arabia, Bahrain, Oman, and others. And remember, we have the May retail sales data out just yesterday, I believe, that really showed a big bump in retail sales that may have floated all boats and maybe benefited spending in Macau as well. And at the same time, we know the Macau government has been trying to diversify its economy to bring in more non-gaming revenue. So it's been trying to hold more exhibitions, events, concerts, and that has yielded some results and perhaps also benefited the casino sector at the same time as well. So we had a very strong month in May because of the May Day holiday, and it looks like this momentum is continuing into June.
We talked about the biotech sector, so it seems like regulators are really helping to at least speed up the approval process here. Tell us a bit more about what's to come.
Yeah, so the approval process, or when you apply to conduct a clinical trial, usually the process takes 60 days, and regulators are proposing to shorten that to 30 days. So this will definitely speed up the process of developing new drugs in China. And already we are seeing this a surge in the biotech sector in China. Stocks up about 60% so far this year. And many of these drug companies, they have been coming up with new drugs, experimental drugs that are attracting the attention of overseas buyers that are paying billions of dollars to license out these drugs. And so the government policy is now coming in to bolster the sector further. And yesterday we had Sang-Mi, our equities reporter, saying as well that there is this talent pipeline flowing back to China, these high-profile scientists that are coming back to China as a result of the stalling of the U.S.-China trade war to help push this homegrown development of the drugs sector.
Yep, certainly a lot going on there. Min Lo, thank you, our China correspondent, with the latest on those two different industries there. We're going to focus away from some of the benchmarks and what we're seeing here, really focus on what's going on in the small cap space, right? Because what we're seeing in the CSI 2000, for example, that gained about 11% this year. You compare that to the main benchmark, that's actually declined about 1.5%. So there is a bit of an opportunity here, but it looks like maybe this small cap rally is at risk of losing some steam. That is our taking stock here this morning. Let's bring in our Asia equities reporter, Charlotte Yang, with the latest. What are you seeing? Why are small caps losing a bit of shine?
Yeah, so market watchers are saying that we see some warning signs in this world of small caps in the Chinese onshore world. So this cohort companies, they're known for weaker fundamentals, but like more volatile moves, and they're liked by retail investors that like to seek, faster and quicker returns despite the risk. And also quant funds like them, known for program trading. So now, but this outperformance, as you mentioned, the CSI 2000 index has been gained over 10%, while the blue chips are in the down territory, and also you're seeing seeing trading concentrated, the near record level, about 30% of the mainland turnover. So, and a couple of things coming up that investors are worried about this rally. The valuations on the expensive side. You also have the semi-annual earnings, which is, like analysts say, it's a historically weak window. And also, the Shanghai and Shenzhen Stock Exchange have refined their rules when it comes to program trading, which the details of it, targeting those abnormal activity could hurt, the trading volume of these small caps. And also, you have the outstanding margin balance have come down a bit, which shows, investors' risk appetite come down.
Yeah, I think you're starting to see, to your point, the conditions that led to, I think, the previous crash, right? Start to form. But this is really one group of stocks that retail investors really like. What appeals to retail investors about this small caps group?
I think to understand how they have come, to now, I think it's also to look at the broader market. Onshore stock this year has really been, quite lukewarm if you compare to Hong Kong stock, because they don't really have, those AI companies, big cap AI companies, and some of those new consumption stocks are all listed here. So which is why, you don't really have blue chips that yield those high returns, and which is why they turn to the small caps. And usually, they also known for has some sort of the concepts. And whenever that comes, these small caps, they just give out really high returns in really quick time. So which is why some of those mom and pop retail investors like these cohort.
Charlotte, thank you so much. Fantastic there, Charlotte Yang, our equities reporter there on today's Taking Stock piece. Right, some breaking news right now out of Israel. The IDF has identified, and again, I'll mention this very short in detail, but just one line coming through, identified missiles launched from Iran towards Israel. Live pictures, as you can see on your screens, in Tel Aviv. So we'll keep you guys updated once we have more details on the story coming through. One line coming through, bottom of your screens. Plenty more ahead. This is Bloomberg.
Here are some big corporate stories that we're following for you today. SoftBank is looking to raise up to $4.9 billion through an unregistered overnight block sale of American T-Mobile shares. According to terms of the deal seen by Bloomberg, the firm is offering 21.5 million shares for $224 to $228 each. Now, this is a discount of up to 3% from T-Mobile's Monday closing price and could be the biggest U.S. share sale since February. American Express teased updates to its travel-focused Platinum credit cards, calling it the company's largest investment ever. The updates will apply to both the U.S. consumer and business Platinum cards, but no specifics on the changes have been provided. Amex has faced intensifying competition for premium credit card customers since it raised its annual fee in 2021. And Meta has tapped Alexander Wang, co-founder of Scale AI, to lead CEO Mark Zuckerberg's superintelligence group. Meta will also be investing around $14 billion in Scale. Known as a prolific networker and well-connected in the AI startup world, Wang's company also has large government contracts. Those ties could benefit Meta as it works to break into the defense tech sector. Chow Tai-fook is said to have increased the size of its convertible bond sale to around $1 billion, making it potentially one of Hong Kong's biggest this year. Proceeds will be used for the jewelry business and general working capital as the company works to lift its image to that of a premium brand. The offering also comes as New World Development, which is controlled by the same family, grapples with around $26 billion in debt.
Yeah, in fact, our team at Bloomberg Intelligence have now just come out with a reaction piece on the Chow Tai-fook, and they've tied that to the New World story. The headline goes, Chow Tai-fook must prove its bond usage lacks ties to New World, which, as Yvonne is pointing out, financial distress there is really causing concern here in Hong Kong as, well, it could drag down, of course, home prices, impair, this bank loan conversation. That's the big one, of course, coming through, and whether or not they're able to secure, of course, that loan. I think it's end of this month. We're waiting for that. Shuli Ren, our Bloomberg Opinion columnist, is here with us to talk us through the developer, whether it's too big to fail, and how important New World is to Hong Kong. And Shuli, I need to also bring in the Chow Tai-fook story, which is part of the conglomerate of the group that's doing very, very well. And it's hard to disentangle both stories. So where's your head at right now when you look at New World in one and you have Chow Tai-fook being able to tap the markets and almost sell anything it wants to?
Yes, it's quite interesting, right? Like Chow Tai-fook is the very capable left arm, and the New World is a limp right arm, basically. And it seems like the Zheng family has been distancing itself from the New World development. Basically, they're not putting in much self-rescue measures. The family siblings, they're not on the New World's board. Whereas on the other hand, Chow Tai-fook jewelry is starting to do pretty well. And you see their stock price has more than doubled this year, and it's catching up to the gold rally. So in a sense, I can see why Chow Tai-fook jewelry is coming up with a big convertible bond sale to show that they can stand on their own, perhaps, that they still have access to financial markets and investors despite New World's woes. Having said that, I'm not sure they can really disconnect themselves all that well.
You mentioned whether New World is too big to fail. What if we see some sort of default? What are you looking at in terms of scenarios? What does this mean for the banking sector here?
So New World, in a sense, is more important to Hong Kong than Evergrande was to mainland China. New World's commercial real estate, New World's bank loans account for 7% of Hong Kong's commercial real estate loans. And unfortunately, most of these loans are unsecured. So if they go default, Hong Kong banks from Hang Seng to Bank of China, Hong Kong, they are going to see a sharp spike in non-performing loans.
Which, I guess, incentivizes this next question, whether or not we will see state banks come in and provide some of that financing.
I think the New World's systemic risk is not so high that the Hong Kong is going to come up with a Lehman-like collapse. The local banks are well capped. But it all goes back to what it means to be too big to fail, right? New World does account for 10% of market share in terms of property sales. Its total assets account for 10% of Hong Kong's GDP. And I mean, Hong Kong, we do have Futures Fund. And the mission for the Futures Fund is to ensure the long-term success of Hong Kong, right? During COVID, the Hong Kong government bailed out the Cathay Pacific. So the question is, what is considered too big to fail? Are we at the point of early stage of economic rebound, and would New World's failure drag Hong Kong back into a slum? I think that's a legitimate question for the policymakers.
Right, and it's not as if we're showing pictures of K11 there, Victoria Dockside, right, which is really the crown jewel in terms of assets. It's not as if New World doesn't have assets. If you look, if you're a lender, there's certainly assets there to be collateralized. So are you confident that they might get what's the conversation right now ahead of this last week of June?
It seems like the biggest chunk of the refinancing loan deal is sealed. There might be some smaller banks that are still hesitant. And there has been reports that the Chinese government has asked the state-owned mainland banks to step in case the smaller foreign banks come out. Even if the refinancing loan goes through, New World still has a lot of financial distress, and they have to do a little bit more, perhaps more liability management exercises to go through this whole process.
We started this out by talking about how Chow Tai-fook obviously has done well, stock's done well, it can issue convertible bonds. This is a market that a lot of companies are tapping for financing. Why can't New World tap this market for financing?
Because its equity is worthless. I mean, at this point, it's not even repaying convertible bondholders. And what are we talking about? The equity really is worthless. And no one really wants to, right? Like, unless you're a strategic buyer who has non-economic concern, say like a state-led bailout, or the family doesn't want to give up on New World and they come in to do some self-rescue. It's also possible.
All right. Thank you. Shirley Renner, Bloomberg opinion columnist on all things New World, and Chow Tai-fook here this morning. Of course, you can take a look at her column this morning. Also, if you want an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter that's out every Thursday, you can sign up through the website, Bloomberg.com/newsletters. Just want to bring you the latest when it comes to what's going on in Iran and Israel. Here, live pictures out of Tel Aviv this morning. And what we're hearing from the Iran news agency is that Iran is extending its airspace closure to 2 p.m. local time today. This on the back of what we heard just a few minutes ago with the Israeli Defense Forces identifying missiles launched from Iran towards Israel. So we're heading into the 5th day, basically, of this conflict, Dave, and still we're not seeing any end in sight.
Yeah, waking up to the same situation, 4:48 in the morning in Tel Aviv, 5:18, I believe, in the morning in Tehran. We'll keep on top of the story here for you and more developments as they come through. Now, just digging deeper into the story, an Israeli official says that these operations, military operations to be more specific, will continue against Iran's missile and nuclear programs, regardless of any potential talks with the U.S. Strategic Affairs Minister Ron Dermer also told Bloomberg that he's not too convinced by reports that Iran wants to de-escalate the conflict.
There's some reports, and then the Iranians denied it, and then they may be passing messages through interlocutors to the United States. I mean, you never know with the Iranians what they're actually doing, but what I can tell you is what's happening in the battle is they're losing. As the president said, I think he was very diplomatic, and he said Iran is not winning this war. They're losing this war. Because Israel's determined to remove 2 existential threats to our country. I mean, remember, Iran is a country that openly calls and actively works to destroy Israel. And they're on a path to building nuclear weapons, and we want to remove that threat. We want to remove the ballistic threat. I'm sorry?
No, understood. So then, is it too late, is my question. Do you need to see the destruction of Iran's nuclear program, its nuclear facilities, before you ever consider going back to the table?
Well, let's remember what happened a couple months ago. The president talked about a 60-day timeline. I was with the prime minister when he went to Washington, and the president told the prime minister, look, he wants to give Iran a last chance to see if we can reach a deal. But what were the outlines of that deal is that Iran was going to have to dismantle its military nuclear capability. That's what was put on the table. And the president has been very clear about this from the beginning, not just the beginning of his presidency. He's been saying this for years. Iran must never have a nuclear weapon. And he's been very clear that Iran cannot have a nuclear enrichment capability, which is how you get the fuel for nuclear weapons. So then you don't have to really trust whether Iran has it or not. If they have no fuel for the car, then it's not a problem. And he gave it time, several weeks. His special envoy, Steve Witkoff, had several rounds of discussions, about 5 rounds of discussions. We were in close contact with them throughout, and they were very clear of what was going to be their red lines in a deal. And unfortunately, Iran thought that they could string these talks on forever and that there wasn't going to be any deadline. And it was clear to us in the last few days that there was no chance that Iran was going to agree to it. Will Iran agree to something else? Now, I don't know. But remember, one of their sites has already been dismantled by us. That's the Natanz enrichment facility. Yes. And we're also basically taking out their missile production factories as well. So we're going to go about our operation to remove these 2 threats. Whether Iran will decide to meet with the United States and agree to terms that they should have taken a month ago or 2 weeks ago or 2 months ago, that's up to Iran to decide.
And that was the Israeli Strategic Affairs Minister Ron Dermer there speaking with Bloomberg's Joe Matthew. Now to some of the other political stories that we're following for you today. U.S. Senate Republicans have drafted a new version of President Trump's signature economic package. The bill expands some tax breaks, raising the debt ceiling by $5 trillion, and makes permanent 3 business tax breaks that were set to expire after 2029. The plan comes at the expense of curbing health coverage for some low-income Americans and makes no mention of a deal on state and local tax deduction. President Trump has directed federal officials to expand efforts to deport migrants in the largest U.S. cities, including L.A., Chicago, and New York. The move comes after protests erupted in hundreds of U.S. cities over his anti-immigration efforts. Trump campaigned on carrying out the largest deportation in U.S. history and has moved to deliver on the agenda, with immigration officers saying they're arresting 2,000 undocumented people a day. President Trump's family is getting into the mobile phone business with Trump Mobile. The service will use network capabilities from all 3 major U.S. carriers. The new venture unveiled by the president's sons also launched a golden phone costing around $500, which they claim is made in the U.S. The family's entry into the mobile phone business could escalate concerns about conflicts of interest.
Yeah, that was a weird headline. The Okay, let's take it back to markets now. Gold futures 34.12. Gold spot is just under 3,400. We're looking at havens on your screens, dollar yen, and it's also BOJ day. And this time in the next hour, we could actually get the results of the two-day meeting, which is, I would imagine, wrapping up as we speak. 10-year yield on your screen. It's also Fed week, by the way. Keep an eye. That 2.5 basis points to the downside here on the 10-year yield. Risk assets, Asia's looking like this. U.S. futures were down, still are down, 0.3%, off lows of the day, though. VIX futures are back above the 20 handle. And Bitcoin, of course, is almost a risk asset here, down about 1,500 a pop here, down about 1.5%.
We're watching Meituan shares here this morning. Interesting note from the likes of Bernstein, and they're downgrading the company, saying the food delivery giant's challenge to expand overseas is going to be quite tough there, as well as increasing competitions at home. So they said UAE, Brazil markets won't be easy for Meituan to get into. Also, this three-player market with the presence of Alibaba and JD in the food delivery business will bring competitive instability. That price target has been slashed to 150. And we'll take a look at Henderson Land as well. Citi with an interesting note saying central office leasing beats expectations there. The stock slightly higher. Coming up, we're going to have T. Rowe Price to join us and talk about these markets and volatility and the like here. Brandywine, also global, to tell us what to expect out of the BOJ. Welcome back to the China Show. Here's a look at the CSI 300, a half hour into the session. Not much to really tell you about. We're seeing a little bit more action when it comes to offshore markets, with the MSCI China up about 0.4%. Equities, for the most part, are kind of treading water, are actually kind of staying okay in the face of all these headlines that we're seeing when it comes to Iran and Israel, with Ukraine, what's happening in Canada. And we have that BOJ decision that could happen any minute now. I think we crunched the numbers, Dave, right? The average time that the BOJ has announced something since Ueda became governor is 11:47 local time.
So that's in about 47 minutes and 5 seconds from now. There we go, just to be more exact when it comes to that. So to the point Yvonne was making, right? So we're in a holding pattern for markets. In fact, we're actually seeing equities move up from like 15, 20 minutes ago. And I think the point we were making here is we know what to watch. And there has been some new information, for example, as it pertains to what's been happening in Israel and Iran. There's been some updates, by the way, out of Ukraine, in case you missed that. And, of course, we'll get an update on why the U.S. president is cutting his trip short at the G7 in a moment. But, yes, all things equal, markets in a holding pattern ahead of some fairly potential event risk out there in the next, let's call it 1-2 hours or so.
Yeah, we have a team all over the world here this morning to tell you about it. President Trump is cutting short, as we just mentioned there, the G7 summit in Canada, hours after he took to social media to call for the evacuation of Iran's capital, Tehran.
President, any statement on why you're leaving the G7 early for Washington?
Well, I have to be back. Very important.
Let's bring in our panel now, our team, really. Bloomberg desk editor Jill Deese is joining us from the G7 summit as well, is our Bloomberg correspondent David Gura. Jill, I'll start with you. On the latest in Iran, we're hearing that there might be some more missiles going through this morning as well. It doesn't seem like day 5 we're hearing much different.
No, I mean, I think at this point it seems pretty clear that this may become a conflict that lasts not just days, but potentially weeks. You did obviously have that statement from Trump just a couple of hours ago, saying that people in Tehran should evacuate. Now, again, this is a city of 9 million people. It's not clear whether Trump has any sort of special insight into whether there's additional, fresh attacks from Israel. But I think, again, at this point, it just seems incredibly clear that this is an evolving conflict. You did have the White House press secretary come out and say that part of the reason, or the reason why Donald Trump was leaving the G7 summit early was because of matters in the Middle East. So clearly, some sort of threats of further escalation here. We'll have to see how this continues to unfold. But it does seem very significant, obviously, that Trump is leaving this meeting and heading back to Washington.
Yeah, David Gura, I'll bring you in. You're in Canada, where we understand that the U.S. president, before he heads back, is, and correct if I'm wrong, still having dinner. But he is headed back to Washington immediately after that. stitch together the story in Israel-Iran for us and why he is headed. What do we know about that? What does his schedule look like, David?
And just to pick up on what Jill was saying, that was such an extraordinary moment when that post came out. We kind of looked at each other and wondered what he was referring to. We still don't have a very clear answer about why he issued that warning. But just looking over the course of the day, there was a lot of conversation about a path forward with Israel and Iran. There was an effort by the leaders of the G7, absent the U.S., to kind of come to some sort of unified agreement to tell those two countries to de-escalate, to stress the importance of doing that. President Trump did not want to be party to that agreement and had the opportunity to talk a bit about why he thought that's the case. He began to push once again for there being a diplomatic solution, said that Iran is effectively at the table because it has no other options. And then he took questions before he issued that statement on Truth Social. He was side by side with Keir Starmer, the Prime Minister of the United Kingdom, talked again about diplomacy, talked again about the seriousness of the situation. And then it wasn't long after we got that post that we heard from Caroline Leavitt, the president's press secretary, that he intended to leave early. And we understand there were many members of other delegations who found out about that through the media, not through official channels. So it did take people here by surprise. Unlike back in 2018 when President Trump left that G7 in Charlevoix, Canada, early, it wasn't apparently out of any sort of pique or anger toward the group or the institution. He said, as he said during the family photograph moment, that he has to get back, he has to deal with what's going on, and Caroline Leavitt underscoring it has to do with the Middle East. So it just raises a series of questions. Does that signal that the U.S. is bound to get more involved in this conflict? And President Trump and his administration so far have taken a back seat, said they didn't want to get involved. Are things going to change? Or is he going to have some sort of hand here in trying to broker a temporary peace or a ceasefire in this crisis?
Yeah, that was what our oil markets were a bit relieved about, that Iran still wants to continue with these nuclear talks, Jill.
Yes, I mean, certainly that's what Iran is saying here. And I think also to David's point, you have had several officials within the Trump administration pushing back against reports that they're escalating U.S. military involvement, saying that the defensive posture that the United States is they're saying it's, maintained there. I think there has been a little bit of confusion over how exactly Trump would like to get involved. Over the past couple of days, you've had somewhat conflicting statements where, he's obviously, as David has pointed out, Trump has been saying that, he wants them to pursue a deal, saying that Iran cannot have nuclear weapons. It's in their best interest to come to the table, but also at the same time, some sort of, in a different way, sort of backing, this idea that, Israel is continuing with this kind of escalation, as David just mentioned there, the idea that Trump's not backing the broader, G7 statements about this. So I do think that does raise a bit of confusion there. But again, I think all just, pointing to the fact that Trump at least sees this as something that he needs to be back in Washington to ultimately deal with. And so we'll have to see how that eventually escalates. But again, yes, I do think significant that at least for now, the Trump administration is, saying that, this is still sort of a defensive posture from the United States.
Team, thank you so much. Jill Deese is here on set with us in Hong Kong, and David Gura, of course, joining us, our Bloomberg correspondent in Canada as well. Right. The other big story we're tracking, it could come out this hour, is the Bank of Japan. So it's wrapping up its two-day meeting today. It's decision day, of course. And generally speaking, you ask economists, they're expecting, as far as rates specifically go, expected to stand pat. But you have other potential complications in the form of maybe a change in the forecast, more details on the bond reduction plan. Sherry An, our co-anchor, joins us, in fact, outside the Bank of Japan in Tokyo for us this morning. Yeah, Sherry, what are we expecting exactly today?
David, you said it, really no change expected when it comes to the rate. We are expecting it to keep steady at 0.5%. That's the consensus by economists. Of course, we'll be watching any hints of future rate hikes. Right now, 1/3 of economists surveyed by Bloomberg expects the BOJ to move in January. But the complications that you mentioned, the volatility in the JGB markets, will we see a review and perhaps a slowdown of that quantitative tightening that the Bank of Japan has been carrying out since last August? We're talking about paring back bond purchases at a pace of about 400 billion yen a quarter. Economists expecting perhaps that to be pared back to around 200 billion yen. The volatility in the JGB space, the $7.8 trillion debt market, will be key, and whether the Bank of Japan prioritizes and listens to the market commentary right now, and if it doesn't, if the bond purchase plans remain the same, what does it mean for yields going forward?
Yeah, it'll be interesting how he communicates all this. And even a lot of focus on what the inflation trajectory is going to be too, Sherry. I mean, what are we likely to hear from the governor about the inflation side of things?
If we hear any caution about inflation risks, that would be a signal about when rate hikes could come. Remember, core inflation now coming in at 3.5% in the month of April. That just means that core inflation has been above that 2% target for the past 3 years or so. But of course, the key question right now, given the issues around growth, is what the Bank of Japan is also very careful about. We're talking, of course, about the fact that we did not get a trade deal between President Trump and Prime Minister Ishiba during the G7 summit. Now, that, of course, is pressuring the Japanese economy. We're talking about an auto sector that takes up about 10% of Japan's GDP, more than 5.6 million people employed in the auto sector, and we have those 25% tariffs. We'll be watching very closely what happens to those comments by Treasury Secretary Weston about extending that pause that we've had on that across-the-board tariffs coming from the U.S. that are supposed to go up to 24% from 10% right now. But as I said, is really what happens to JGB yields. Remember, treasuries have been also very impacted by the moves in the JGB markets. And really that runoff and the pace of that runoff will be key in what happens in global debt markets as well.
Yep, obviously watching from 400 billion yen to 200. That certainly is the adjustment the market is expecting there. Our co-anchor of the Asia Trade, Sherry An, joining us outside the BOJ here this morning. And we're going to get plenty of analysis on the central bank's upcoming decision with Brandywine, the firm really watching closely, of course, what the signal the BOJ is going to have in terms of those government bonds and JGBs. That interview is coming up with Carol Lai pretty soon.
Yeah, just before we head to a short break, an update here coming through out of Hong Kong Chief Executive John Lee and that policy address, that policy speech, by the way, the weekly one, I believe, that he is speaking right now, that China's top Hong Kong official, Xia Baolong, will be visiting Hong Kong from tomorrow, June 18th, all the way to the 22nd. That's an update there. Plenty more ahead. This is The China Show. Right, welcome back. An update. Brent, West Texas, and as you can see, these should be session highs right now. 72.50 on West Texas. You do the math. That's a bit of a spread there. About $1.30. An update, of course, about in the last hour or so out of Israel, and of course the IDF has identified some missiles there from Iran, and of course the broader context, at least for today, is the post out of the U.S. president of calling for the immediate evacuation of Tehran. So that's really what set us up in terms of the trading session today. So we're up now. There we go. As I speak, we're continuing. Okay, something must be happening. Anyway, 1%, 1.2 now on Brent crude.
Yeah, the Iran News Agency also in the last couple of minutes extending the airspace closure, the government there, to 2 p.m. local time on this Tuesday. Let's bring in Thomas Poullaouec, head of multi-asset solutions for APAC at T. Rowe Price. He joins us here in the studio. You mentioned, how do we separate the signal from the noise? You say the signal actually is in the oil price. What are you seeing?
Yeah, so we have seen the oil price reacting very abruptly last week. It was one of the biggest weekly jump in terms of oil price that we have seen in the last 40 years. So what we are now expecting is some tensions to stabilize so that the oil price is not going up. But if the oil price is really under pressure, that is really what will be impacting the economy. And that's why I say it's more the signal for us as asset allocators, rather than trying to predict what Israel or Iran will do. In that sense, I have no hedge on what would be next.
What does it signal as far as actionable advice for, say, equity investors right now in terms of, because you guys have been, are going long energy as a trade?
Yes. So I think there are two signals that I would take. One is at the sector level. You can be long energy to for a sector that has been quite depressed for quite some time with low valuation. So expect a re-rating on the back of that oil pricing moving higher. But the second most important signal is the feed through inflation. So I think we have been on a camp where inflation should be rebounding from a low base in May. You have tariffs potentially coming, and definitely you have all of these reshoring, deglobalization, which is basically a bullish commodity. You need to build stuff, so you need to buy stuff. So we have been not only long energy, but we have been long gold miners, long copper miners. All of these sectors, natural resources, are typically in favor in this environment.
It sounds to me that you're saying that the Fed might have to be sort of in inflation fighting mode soon in some way. Does that mean that we're not going to see that Fed put?
No, I think the Fed is more on a wait-and-see mode, waiting for not repeating the same mistakes that they did in 2022 and being a bit more upfront on fighting inflation and then wait for the growth data to be saved in a way. So not expecting the Fed put anytime soon, and it's more waiting for the inflation data to come in and wait for a reaction from the Fed. But a Fed cut would be later this year at best, or even in 2026.
And how does it inform you about how you trade duration at this point?
Yeah, so on duration, we have been quite underweight for quite some time. We see yields moving higher, not only on that inflationary pressure, but also on a lot of issuance coming into the market. So the supply demand that we have seen, which are lower demand for U.S. assets from overseas investors, and more supply coming from further issuance should push yields higher. So we have been underweight U.S. duration. But in fixed income, we see opportunities still in credit sectors, where we have overweight in Asian credit or even in high yield.
Okay. We've been talking to our guests about this bid that we're seeing in the dollar amidst all these geopolitical headlines. Do you think the dollar is gaining some sort of haven status again, or what do you see overall?
Not as much as before. I think if we are really seeing that the incremental capital or incremental dollar is now not necessarily invested into the US. It can be invested in Europe, it can be invested in Asia. And what that means is that structurally we see a weakening of the US dollar. So you have also the growth exceptionalism that we have seen before that is not as much in favor of the US as before. So we should see the US not benefiting as much on the trend-wise. Then you have some events like that can have some demand for the US, but the US dollar, but you have seen Japanese yen reacting more, or even I prefer gold in that scenario to hedge as a haven.
Amidst all the issues, equity markets have actually been okay and good in some cases. Do you trust this equity market rally?
I think we are at a stage where complacency is quite high. Okay. For example, the trade policy uncertainty is back to January level. And to me, we are only in that truth period. And in a couple of weeks, we might see tariffs coming back. So I think there is a risk that tariffs are coming back. Growth is definitely slowing. So that push earnings at risk. So I think earnings are still too optimistic going forward. So that's why we have a cautious position on equity underweight relative to a benchmark.
Okay, can you tell us what the equity sort of allocation is right now? You said there are better opportunities outside the U.S., but you've also reduced your underweight in the U.S. as well.
Yeah, so that was a bit of a risk management. We were a bit more concerned from a U.S. underweight perspective. So that was in March, April. And then you have the AI theme coming back, earnings being strong. So we reduce that conviction, and we are a bit closer to benchmark now on the US. Still underweight, but we see more opportunities, I would say, in Europe and emerging markets, including China, where these markets should have better earnings forecast, and they come with a cheaper valuation.
I actually got, this is going to make sense, I actually got an email yesterday from a bank. I'm not going to name the bank. They're offering, get this, 9% on dollar time deposits. How do I look at cash at this point in time? Dollar cash, for example, because it seems to be banks are struggling, or not struggling, but they're scrambling for dollar funding. And how does that affect, where you park your money defensively in an environment like this? How do you feel about cash?
So we are underweight equity, we are underweight duration, and we are overweight cash.
Oh, there we go. Okay.
So I think you can respond to that proposal.
Thomas says yes.
Yes. But definitely on the short term, given the uncertainty that we see rising again, with we have a low vol environment, volatility is likely to pick up. I think having some cash, having some gold, having some safe haven could be a good hedge.
Tell us a bit more about the slight overweight in China here right now. Obviously, this is an equity market that's done quite well, especially here in Hong Kong. What's going to be that next leg that makes things even better or actually continuing on this momentum?
Yeah, so we have been overweight China since January. We kept that overweight. It was under scrutiny last month. And I think what we debated is that, in a way, China is a bit the last place of certainty, in a way, compared to a lot of uncertainty that we see outside China. So in China, you have, yes, we know that growth is challenged. We know that you have potential for further stimulus, but at a low scale. But at the same time, we got good news yesterday with retail sales really taking the baton from industrial production. So I think we should expect consumption to take some relief, and then you have good stock opportunity in China. So that's what I like about China. Is as much the market, but more the companies that can benefit from a trend of rebounding consumption.
Is it easier to sell the long China story now to non-Chinese investors?
It's still hard.
Okay.
It's still.
What's the sticking point so far? What seems to be the, that mental gap that they need to get over to buy into the story?
Yeah, I think the issue is more the how volatile this market could be to news. And the retail sentiment driving really upside, downside quite fast. The uncertainty regarding the scale of the stimulus and the fact that the housing sector is still a big challenge in China. So there are still some headwinds, but I think tactically the market was too cheap to ignore. And that was something that we took an opportunity to overweight in our portfolio.
Right. The final question. We have the Bank of Japan. The Bank of Japan today. The Japanese equity market story has sort of like taken a back seat. It's been range bound. We're nowhere near the highs just yet. How are you looking at Japanese equities, within your sort of broader equity allocations?
Look, if you give me 5-10 years, that would be a market that I would be overweight for. But tactically, I'm a bit more neutral now. So I have a bias to be overweight, but now I'm more neutral. Given that you have the tensions on the trade tariff, so we got some news that maybe there is no agreement yet between the US and Japan. That was expected to be the next after the UK.
The easiest to be made after the UK.
Yes, so this is in the background. You have an election also coming in July, so some political uncertainty. The BOJ also we are more on hold for now, but potential rate hike later. So all of this shows that earnings could be a bit more at risk with the Japanese yen also improving. So that creates some headwinds in the short term. But corporate governance is definitely there in Japan. Inflation is back. So this is a market that we should see good nominal growth in the years ahead.
Okay, good longer-term story. Fantastic. It's always great to speak with you, Thomas. Thank you so much.
Very much.
Thomas Poullaouec, the head of multi-asset solutions, Asia-Pacific at T. Rowe Price. We have some breaking news.
So this is quite interesting. So what we're hearing from New World bondholders, at least some of them, is that they have received the interest payment on that dollar note that was due on Monday here. So they have paid interest due on that dollar note. That does give New World a bit of breathing room now as it works to complete, of course, that 87.5 Hong Kong billion, loan refinancing deal. So they were initially facing that $5 million in interest payments. Yeah. We're hearing at least that some of it has been paid. And of course, if they had missed that deadline to pay that coupon within 14 days, that would have triggered a default. So we've basically stepped back from that, at least for now, according to what we're hearing from bondholders this morning. We got plenty more ahead. This is Bloomberg.
Right, we're about 56 minutes into the cash market session here. We have swung, and as you can see, session lows right now. Not a lot of volume out there. A lot of event risk, I guess, is the mirror image of that, sort of the different side of the same coin here. There are some bright spots. The casino stocks, big rally overnight, against the grain today, on the back of, I guess, high-frequency data that indicates that the industry is doing well for the month of June so far, up 4%. Drug makers. So the conversation is to shorten the cycle from 60 days, the approval time that is, to 30 days. That's still a conversation, but as you can see, these are stocks that have rallied substantially of late. Chip stocks, of course, very much in focus.
Yeah, so of course, this continued AI optimism. We have more U.S. incentives as well, so chip stocks doing quite well. SK Hynix really leading the charge here. Advantage as well, up some 3%. This is Bloomberg. .29 a.m. in Tokyo. Japanese markets are heading into that lunch break here, and we could be hearing any minute, any hour now from the BOJ. We're likely to see nothing in terms of what the rates outlook is going to look like, but really it's all about the forward guidance, right? What is the inflation trajectory going to be? What is going to be this whole issue of trimming the balance sheet and what that debt issuance is going to look like in the next 3 to 6 months? It's going to be quite telling for the market. And JGBs, we are seeing yields tick slightly higher on the 10-year at 145 here right now. There is some obvious weakness in the currency, but yes, it's going to be all about what Ueda says in that presser too today.
Yeah, and how he frames, well, for one, to pick up at inflation, right? It's something that our folks at Bloomberg Economics have flagged, that inflation is already on an uptrend, and then you have the spike in oil prices. So, from focusing on core inflation, we now have to focus on not just core, but headline inflation and what that means really for the broader story. And might that indicate, of course, a future window or earlier window to hike interest rates. So we are on standby, of course, for the Bank of Japan, which could come out any time now. No rate change, of course, is expected, but we are watching, of course, the plan on bond purchases, as Yvonne was pointing out there, and certainly the lack of a buyer as big as the BOJ stepping into those shoes. Providing really demand, and we're coming off, if you take it back all the way from about second week of May, we're coming off not too good bond auctions, right? When you look at bid to cover, for example, you had a 10, 30, 20-year. What this really means for policy, and you know what? Our rate is going to keep going up in Japan. Carol Lai is with us right now, portfolio manager and senior research analyst at Brandywine Global. Carol, good morning, and thanks for joining us. The question I immediately have when I think about the BOJ is there anything that puts at risk the trend that began last year of just higher interest rates in Japan, higher JGB yields, to be more specific?
Yes. I think there are two risks really here. The first one obviously stems from, the growth metrics here. And that's really related to, number one, Trump's tariffs, right? The trade negotiations are still ongoing between Japan and the U.S. And if the conclusion is not in favor of Japan, then I think it's going to be tougher for the BOJ to be raising rates more actively, right? I mean, you already had the first quarter growth, which was not great. And then the second quarter should not be too great either, right? Given that there were tariffs. So therein lies that issue. Now, the other thing that people would want to think about, the market would think about as well, is the fiscal risk, right? Which is why the JGB long and JGB yields have been weak. Is that there is a fiscal issue? The debt is very high. Government debt is high in Japan. So there's also a limit to how much the BOJ would, at the end of the day, be able to raise interest rates. So I think, from that perspective, from the growth perspective and that fiscal perspective as well, that could limit the BOJ to some extent.
Talk us through what you're expecting in this whole bond purchase reduction plan, right? This exit strategy that the BOJ has to lay out. What do you think is going to, there's obviously a lot of reports out there, but what do you think could actually satisfy the market and really kind of limit and mitigate some of the volatility on the long end of the curve?
Yeah, I think, well, the thing about the BOJ and things like that and that tapering, there was already a Nikkei report yesterday. I think it came out yesterday that, there's going to be an easing from that 400 billion yen per quarter to about 200 billion yen per quarter. So that's already halving that QT program, right? The thing is that if they do not go ahead to halve it as per what was reported, then I think the market's not going to be very happy. As it is, you have got, 30-year interest rates now at 2.9%. If, they are not going to satisfy the market, it could easily shot up above 3%, which is, where we were the highs a couple of weeks ago.
Carol, do you expect so from our perspective, I want to ask you about demand for a lot of these JGB auctions. And from our perspective, we see bid to cover, and that's trended lower. But I want to get your sense in the markets of how you would describe demand right now for these offerings.
Right. I think, when we looked at the JGB market, and it is, the JGBs are a sizable portion in global indices, right? So there is some demand still from foreigners to buy JGBs. If you compare the yields of, the JGBs versus other DM markets, then, there is still a yield gap that is, is still lower. But from the perspective of the locals themselves, the problem here is that what we have been hearing all the while is that locals are not, the pension funds, the insurance companies, the banks, they are not supporting their own domestic market. They obviously think that, there is fiscal risk. They want volatility to come off. But if you look at it from their perspective, you look at U.S. Treasury 10-year yields versus JGB 30 years yields, actually that gap has been narrowing a lot. So we suspect that at some point, it makes a lot more sense for the locals, the domestic buyers, to come back into the market. So that's how we are viewing things at the moment.
Yeah, the narrative right now still remains a long and steepening of the curve. Does that stay that way, Carol? And what part of the curve do you think is the most vulnerable right now?
Right. I mean, the curve may still, it's been, if you look at the 10s, 30s curve, right, it is as steep as it can get. Even the 230s is extremely steep still. So, I mean, from the perspective of an investor, it still looks, it looks attractive. What we can see here is that if the BOJ were to eventually start raising rates again, the curve could actually flatten out, right? All it needs to do is the long end remains roughly at where it is. The short end would go up. The curve would flatten itself. Now, there is a risk, of course, that the long end would sell off. But I think, the BOJ, knowing that the super long end is, the demand is still not as good, precisely the QT program, the reduction in QT, if it's announced today, that would really, really help the long end yields to remain more stable.
Carol, speaking of your, the idea that we might and maybe will get a rate hike at some point. We spoke with our Bloomberg economist who covers Japan, and what's happening, he says, in the Middle East, and I'll let you listen to that soundbite, but what's happening in the Middle East might actually force the hand somewhat of the BOJ to move sooner. Let's split it out, guys, please, if we can.
Bloomberg economics have a worst-case scenario, which I really hope that won't happen, $130 per barrel. If that happens, it's going to game changer for the BOJ. BOJ won't be able to say anymore that we should be very cautious. Rather, the BOJ has to shift to a inflation fighting mode if that happens. So in a nutshell, the huge dependency on the Middle East oil for Japan's energy is linchpin for Japan's economy.
Yeah, Carol, maybe the example given there was quite extreme, 130 oil. But I guess, the point being, what kind of tail risks should one consider right now when it comes to, the JGB or the BOJ conversation?
No, I think, the Bloomberg economist, the reporter there, has really been, quite spot on. Because if you look at where headline and core inflation is for Japan, the headline core inflation has actually reaccelerated recently. Now, headline to some extent was driven by food prices, rice prices, especially. Well, they have, in Japan, the government has tried to do certain, put it in certain measures to kind of push that down back again. But if you see core inflation is actually accelerated, if you look at the global core inflation, which is ex food and energy, it has reaccelerated to about 2%, right? So that is a sign that, the BOJ is actually increasingly getting caught in a bind. And that is a risk because you have got tariffs, so growth is coming down. Growth is going to be, slightly weaker, but your inflation is going to go up. So rising oil prices doesn't help. So that really puts the BOJ in a bind. They at some point, if this current situation continues of rising oil prices, that totally does not help their decision making. And at some point, they might be forced into raising rates, just to ease off the situation in inflation. Of course, the hope, I think they're trying to push it down the road, and only when it gets to a point where, they are pushed to raise interest rates that they would. But I think at this point, given the growth concerns still, they are, at least for this meeting, they're obviously not going to do anything for now. And just leave rates at
Carol, I was going to get, before we go, I was going to get your yen outlook. I mean, we've seen a lot of policy shifts. There's a bit of dollar fatigue that's going on in this market. And of course, you have the haven flows coming to the Japanese currency right now. Where to next, do you think, for the yen?
Right. I think, if we look medium term wise, we do still like ex-dollar currency. So we do like it on two, on a couple of reasons. The first being, the US dollar is very expensive. The second one being the weighting of, US growth differentials, because you are already seeing that kind of payroll growth in the US coming down at the margins. Trump's policies are also reducing growth further. The third, like you said, there is a lot of, fatigue in U.S. assets and the reassessment of, capital inflows. And, it creates a kind of self-fulfilling prophecy, right, towards a weaker dollar overall. So if you look at the yen, I think medium term, we do think that it should be able to move at least, somewhat below 140. But I think at this point, at this juncture, given how much, investors have already, are quite positioned in the yen, there is a risk that, if the BOJ, in his press conference later, if he's not even, he's going to continue going to be dovish, or, the Fed in 2 days' time, they are more hawkish, then the yen could actually sell off a bit more from here towards the 150 level. So there is, unfortunately, there's a bit of a range that I think that the yen is going to be in at this period of time until, I think some positioning gets cleared out. The yen should be able to then rally towards, below 140.
All right. Carol, thank you. Carol Lai there, portfolio manager and senior research analyst at Brandywine Global. Of course, we are still awaiting that BOJ decision. She's standing by until we get anything in the next few minutes or so. Subscribers can also turn to the terminal for more on this. T-Live Go is your function for the latest updates, commentary, and analysis from our expert editors. Plenty more ahead. This is Bloomberg.
Right, welcome back. You're watching the China Show. Let's talk about Israel and Iran here. So an Israeli official says military operations will continue against Iran's missile and nuclear programs, regardless of any potential talks with the U.S. Strategic Affairs Minister Ron Dermer also told Bloomberg he's not too convinced by reports that Iran wants to de-escalate the conflict.
There's some reports, and then the Iranians denied it, and then they may be passing messages through interlocutors to the United States. I mean, you never know with the Iranians what they're actually doing. But what I can tell you is what's happening in the battle is they're losing. As the president said, I think he was very diplomatic, and he said Iran is not winning this war. They're losing this war because Israel's determined to remove two existential threats to our country. I mean, remember, Iran is a country that openly calls and actively works to destroy Israel. And they're on a path to building nuclear weapons, and we want to remove that threat. We want to remove the ballistic threat. I'm sorry?
No, understood. So then, is it too late, is my question. Do you need to see the destruction of Iran's nuclear program, its nuclear facilities, before you ever consider going back to the table?
Well, let's remember what happened a couple months ago. The president talked about a 60-day timeline. I was with the prime minister when he went to Washington, and the president told the prime minister, look, he wants to give Iran a last chance to see if we can reach a deal. But what were the outlines of that deal is that Iran was going to have to dismantle its military nuclear capability. That's what was put on the table. And the president has been very clear about this from the beginning, not just the beginning of his presidency. He's been saying this for years. Iran must never have a nuclear weapon. And he's been very clear that Iran cannot have a nuclear enrichment capability, which is how you get the fuel for nuclear weapons. So then you don't have to really trust whether Iran has it or not. If they have no fuel for the car, then it's not a problem. And he gave it time, several weeks. His special envoy, Steve Witkoff, had several rounds of discussions, about 5 rounds of discussions. We were in close contact with them throughout, and they were very clear of what was going to be their red lines in a deal. And unfortunately, Iran thought that they could string these talks on forever and that there wasn't going to be any deadline. And it was clear to us in the last few days that there was no chance that Iran was going to agree to it. Will Iran agree to something else? Now, I don't know. But remember, one of their sites has already been dismantled by us. That's the Natanz enrichment facility. Yes. And we're also basically taking out their missile production factories as well. So we're going to go about our operation to remove these 2 threats. Whether Iran will decide to meet with the United States and agree to terms that they should have taken a month ago or 2 weeks ago or 2 months ago, that's up to Iran to decide.
Israeli Strategic Affairs Minister Ron Dermer there speaking with Bloomberg's Joe Matthew. And subscribers can watch us live and see our past interviews on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about and become part of the conversation and send us instant messages or questions for our guests throughout the shows. Check it out at TV Go.
Welcome back. You're watching The China Show. Chinese President Xi Jinping is in Kazakhstan for talks with Central Asian leaders. Now, the meeting is seen providing a counterpoint to the G7 summit taking place in Canada. Let's bring in Min Lo, our China correspondent, with what is on the Chinese president's agenda on this trip.
Yeah, it's a 3-day trip, and President Xi met with the Kazakh president yesterday, and there are a few things that stood out to me in his messages to the public, because there was a readout that was published on Xinhua, and the first thing he said is to call on both countries to fight for the common interests of developing nations, which is not a surprise. China has always positioned itself as the advocate for the global south and to erode what it sees as this U.S.-led international order. The 2 countries also committed to cooperate on counter-terrorism efforts. And this is particularly important to the Xinjiang Autonomous Region in China because it borders on 8 countries, including Kazakhstan. And President Xi also touted the Belt and Road Initiative, calling for better cooperation when it comes to railroads, ports, energy. And remember, the Central Asia is a place with a lot of resources, especially when it comes to rare earths, oil, uranium, and that's why it is the nexus of this geopolitical competition with many countries, including the Italian Prime Minister just last month visiting Kazakhstan, the European Commission President visiting Kazakhstan as well in April, and a few days ago you have Marco Rubio, the U.S. Secretary of State, speaking with the Foreign Minister of Kazakhstan. So President Xi is also there to jostle for more political influence and power in this region.
Yeah, as he tries to cement sort of those ties in Central Asia, tell us a bit more about the leaders that he's meeting with while he's there.
So he is meeting with the other Central Asian leaders as well, and it's part of this China Central Asia Summit. And again, these are some of the regional platforms that China favors when it comes to building its alliances with other regions, right? There is the China-Africa Summit, there is the BRICS, and then there is the Shanghai Cooperation Organization. And remember, this is the third overseas trip that President Xi has made, and just looking at his destination, the first one was Southeast Asia, the second was Russia, and the third is Kazakhstan. So it really shows that these neighboring regions surrounding China, they are much more important to China for Xi's personal diplomacy when compared to some of the further regions, the Western countries that are taking a backseat when it comes to President Xi's overseas trips.
All right, thank you, Min Lo, our China correspondent. Let's check into some big political stories that we're following for you today. U.S. Senate Republicans Republicans have drafted a new version of President Trump's signature economic package. The bill expands some tax breaks, raises the debt ceiling by $5 trillion, and makes permanent 3 business tax breaks that were set to expire after 2029. And the plan comes at the expense of curbing health coverage for some low-income Americans and makes no mention of a deal on state and local tax deduction. President Trump has directed federal officials to expand efforts to deport migrants in the largest U.S. cities, including L.A., Chicago, and New York. The move comes after protests erupted in hundreds of U.S. cities over his anti-immigration efforts. Trump campaigned on carrying out the largest deportation in U.S. history and has moved to deliver on the agenda, with immigration officers saying they're arresting 2,000 undocumented people a day. President Trump's family is getting into the mobile phone business with Trump Mobile. The service will use network capabilities from all 3 major U.S. carriers. The new venture, unveiled by the president's sons, also launched a golden phone costing around $500, which they claim is made in the U.S. The family's entry into the mobile phone business could escalate concerns about conflicts of interest.
There we go. I mean, if it is made of gold,
it's quite cheap for $500.
I was about to say, trading at 3,400 an ounce is maybe that's another way to go long on gold. So we're looking at, this is a very nuanced story here. So I think this time yesterday, I think it was the Global Times, if I'm not mistaken. Yeah, the Global Times reported that China's first clinical trial of this technology that actually allows signals from the brain to control an external device. In other words, brain implant race, China's joining the U.S. with that. Markets are reacting right now, maybe day 2 of this, and you have brain tech stocks surging on the back of that story. So you take a screenshot of that in case you are curious what that cohort looks like in the event we got more news as far as that is concerned. Okay, we have
some latest lines crossing when it comes to Axios, reporting about possible U.S. and Iran talks. So Axios is saying that the White House is now discussing the option of having a meeting this week, and it would be between Witkoff and Iran's Abbas Araghchi. So this is the details that we're getting here. And of course, as we've been talking about, what really led to a bit of a relief in oil prices just overnight was the fact that, Iran reportedly was still interested in continuing discussions with the U.S. on these nuclear talks, despite what's going on in the air right now.
Yeah. You know what? VIX futures, I'm just looking at that. If we could get that up, that's UXA. Coming off a little bit, maybe on the back of this potential path to de-escalation. But I think, the other point we want to make, and we just played an interview out with that Israeli official a few minutes back, that agnostic of what happens with talks and whether or not Iran wants to de-escalate the situation, they will continue on this military offensive that's taking place right now. But yeah, that's the line so far.
Oil markets are sort of gyrating all morning here, but we are seeing maybe a little bit more of that pressure now relieved here on the oil price. We're trying around that 73.88 sort of level here this morning. This is Bloomberg.